Southeast Radio's Business Matters with Karl Fitzpatrick.
Well, Lowe has successfully built businesses and now as a recognised revenue leader is helping other organisations to become high-performing entities. Wade, we're looking forward to hearing your secrets for maximising revenue, and you are very welcome to Business Matters.
Hey, good morning, Karl. Great to be here. I wanted to say congratulations because I just heard and learned that you are a finalist for the EY Entrepreneur of the Year program. That is a huge accomplishment. I know a couple people that have actually been nominated as well in the States in previous years, and I know kind of what a big deal that is. You should be real proud about what that means and what you've accomplished. It's a big deal.
Thank you so much, Wade. Much appreciated. So, of course, you are a seasoned entrepreneur yourself and revenue leader. But when did you first realise that you possessed an entrepreneurial mindset?
Well, started my career off in sales in a more traditional professional environment for kind of bigger, larger corporations. And then about my mid-30s, which is a little late for some entrepreneurs, mid to late 30s, I had been working for a VC-backed, rapidly growing startup, and I was the VP of sales. And once that tenure had ended, I realized at that point, I think I could probably do this as well or better than the company that I was working for or the companies that I'd worked for, and decided at that point I wanted to take a step out, own my own destiny, and see if I could build something that was meaningful and valuable outside of building for somebody else.
So tell us about your own entrepreneurial successes and how you achieved growth with these enterprises.
I think it's very much related to being able to build a good team and having good people around, and then having a product or a service that's actually in demand that people want and need and have declared that they want and need prior to starting the business. That's one thing we always did, was make sure that if we're going to step out and we're going to do our own thing, or even after the first one, the next one, or the next one, before we actually get started, invest the time, invest the money, and determine exactly which direction to go, we wanted to make sure that there was a there. So I always made sure that we had an idea, and I would then take that idea out to people that I knew in different industries in the market and make sure there was interest. And if there was enough head nodding and people willing to say, yes, if you had that, then we would pay for that, then we'd launch into a full-blown business.
You have also led revenue teams for two of the fastest growing companies on the Inc. 500 list. What strategies do you believe work best for revenue generation, and how does your approach differ from company to company?
Great question. So the primary thing that will drive explosive growth, at least from my experience and what I've seen, is having a really good inbound engine. I think it's very, very hard to drive explosive growth if you're relying on an outbound motion. You can still build a nice, successful, growing business. But I think an inbound motion is the fastest way for explosive growth. And that typically means through marketing channels, whether that be paid, whether that be organic, whether that be channel partnerships. But having an inbound engine is really how you start to accelerate growth. So if you can tap into that, and then secondarily, it's not just getting the customers, it's actually retaining the customers. So if you have a really strong demand engine and you're acquiring a lot of customers, but you're not keeping them, it doesn't matter how many you continue to acquire, your growth will stall. But if you can acquire the customers and then keep the customers and then expand with those customers, that's when you get to really accelerate growth, because then you have all three components of growth working simultaneously. So first it's demand, and then it's retain, and then it's expand. And if you can do those things, that's how you hit the growth accelerator.
And when it comes to an inbound engine, I found over the years, it's been impossible to beat Google Ads.
Yeah, and it's harder. I laugh because in two of the businesses I was in, when we were the first companies to actually do Google paid ads for that particular service in that particular industry. And so we were very fortunate in that regard. And then as we started to do that and got a lot of momentum and traction, obviously a whole slew of competitors came in and started doing the same thing. I don't think there's an industry you could go into now and be the first to do paid ads because everybody does it. But this was, between 15 and 12 years ago, you could still go onto Google and there are certain industries where there wasn't paid ads running yet, and you could really get ahead of everybody pretty quickly.
And through your co-founder, On Demand and done-for-you revenue operations services, what type of business owners are you working with now?
Yeah, typically founder-led. I like founder-led businesses, or owner-operated. It could be founder-led, however you want to think about it, founder-led or owner-operated. Typically in the range, if it's a software company, no less than $5 million. And if it's a non-software company, then it's probably going to be at least 20, 25 million probably. And then that'll range from 5 to 50 on software, 25 to maybe 100 on non-software businesses. And I'm industry agnostic. So it doesn't, because I've been in a bunch of different industries in my career. So it doesn't really matter what the industry is. It's much more about who's the owner operator, who's the founder, what kind of help are they looking for, and is the help they're looking for specifically tied to growth? Because if they're looking for ways to like reduce their OpEx or they need finance help, that's not me. But if they're looking for ways to accelerate their growth and get to that next level, specifically around revenue generation, then that's where I help.
And is your area of expertise more into business to business or business to consumer type organization?
Great question. B2B for sure. D2C or B2C is a different animal. I'm minimally competent just because I've been around business for a long time, but I'm definitely not an expert in that arena. I know people who are, so I could always make introductions to anybody if they wanted help in that regard, but that is not where I play. I am definitely focused on business to business.
So on that basis, how reliant are your clients on LinkedIn as an inbound marketing tool?
You know, I've been part of LinkedIn for probably, 15 years, maybe even longer at this point. And I've seen it change a lot. So I would have given a different answer to that question at the beginning. I would have given a different answer to that question 5 years ago. And I may have even given a different answer to that question a year ago compared to now. But it is one of the better channels for sure. And that's where everybody hangs out. Like, you know, if you're in business and you're somewhat trying to keep up to date with what's happening, or you're trying to build a brand for yourself, personal brand, business brand, whatever it is, like that's where the community is. And so virtually every business that I'm engaged with is maybe not the business itself, but at least the leadership team is heavily engaging in LinkedIn at the moment.
What advice do you give to clients in terms of how to maximize the benefits of LinkedIn from a business generation perspective?
Don't be salesy, and don't promote your company page. Nobody wants to read your posts about whatever it is you're trying to sell, really. Don't do that. And certainly company pages do not resonate nearly as well or get the engagement that the individual pages do. And then be authentic, be genuinely authentic and have some type of area of expertise. And you can't be an expert on everything, which is fine. I would never go on and post about, financial modeling, although I can do it. It's definitely not an area where I like to spend a lot of time. So I'm not going to go on there and talk about that. But if you're going to try to build some type of a brand or an inbound motion related to your brand on LinkedIn, then you've got to be authentic and you have to have some type of credibility that what you're talking about, you're actually an expert in, and then that will attract the people that you want to you.
And Wade, in your opinion, what are the common mistakes that businesses make when it comes to scaling?
So one is early on, it's trying to hand off sales too fast or too early prior to the founder, with the founder, the one leading the charge initially. Sometimes they will often try to hand that off too early because they don't like to do it. So that's one mistake that I think owner-operators, founders will make early on, is that they'll try to hand sales off too early. The other is what I was talking about before, is building a really good mousetrap to be able to get the inbound motion flowing, but then not building the infrastructure to actually fulfill on the leads and the customers that are coming. And there is not an unlimited number of companies that will work with you. So if early on you get a reputation of providing a bad product or a bad service, even though your growth may be really accelerating at the beginning, if you can't fulfill on that, you will quickly get a reputation that you're not a good company to work with. And that will make it so much harder to attract and retain new customers. So the other mistake is just not building the infrastructure and the support needed to provide a world-class customer experience once somebody comes in the door. Because if you have a churn problem, it makes it nearly impossible to build a sustainable business.
In recent years, we've seen many companies remove their contact number and a contact email address from their marketing and as well as their online presence. Are you in favor of that?
No, I hate it. Candidly, I hate it. Any company that I work with, they absolutely go the complete opposite direction, and that is try to talk to the customer as much as possible. And maybe that's not for every business model, right? I'm not suggesting that everyone should do that, but if you're trying to hide from your customers, I think ultimately that provides a very bad, unless it's a self-serve, low ticket, and a low monthly fee SaaS model, fine, I get it. But if you're, if you've got a business where you're actually servicing the customer, they're paying a meaningful amount of money to work with you, then you got to talk to them. And there's no better feedback than talking to your customers, especially with AI right now. You can have AI listen to all your calls and tell you what pain points customers are having and help that drive the focus of the roadmap or new products or new strategy or new content. Like, just, I can't imagine why anybody wouldn't want their internal people talking to the customer.
And in terms of funding a scaling business, in what situations would you recommend bootstrapping the business, and when should venture capital backing be considered?
I would always argue like venture capital is like the last resort, because I just think it changes the dynamic so badly. And there's a big celebration and a big focus on raising money. But raising money is the starting line. It's not the goal. And there's a lot of celebration around, we raised a bunch of money. I'm like, great, you just got started. And the dynamics internally change. So if you can get customers and you can get companies to pay for your product or service without having to raise VC money, because most companies aren't actually VC backable anyway. Look, the reality is they need you to get 10 times the return on their investment. They give you $1 million, they need you to give them 10 back minimum. So that's the game you're playing, right? You raise 10 million, you got to get them back 100. You raise 100 million, you got to get them back $1 billion. And that's the game you're playing. And you got to know that. So it creates this unnatural pressure to grow at all costs. And a lot of times those businesses don't make it. Now, some businesses are super capital intensive, like building enterprise software, and oftentimes it's hard to bootstrap those. You might need money, and fine, you got to go down that path. But I always recommend, there's nothing wrong with building a $10 million business and selling it for $30 million. You don't have to build $1 billion enterprise. And plus, if you build $1 billion enterprise and sell it, you may only walk away with $10 million anyway, because you might get diluted all the way down as you're raising money. So I think it's just a lot. If you can, it's a much more enjoyable ride if you can bootstrap your way and get to profitability.
And what are the important elements of an effective go-to-market strategy?
You got to have product market fit to start, or it's a non-starter. If you don't have some type of demand for the product that you're, or service that you're looking to bring into the market, then you will just grind your way into oblivion. So first you have to have a strong go-to-market. Secondarily, typically, especially B2B, it's founder-led sales. So you need the founders got to be out in front, and they're gaining the trust of the customers, because at the end of the day, those clients, those people, those customers are betting that the founder will figure this out, because there may not even be a fully baked product yet, but the idea is good, the problem's hard, they believe the founder can solve it. And then secondarily, like once that happens, you start to get a good motion, you have to build the infrastructure behind it to make sure that you can actually keep the commitments that the founder's been out making to the market.
And Wade, when you were looking to create a high-performance business environment, what leadership and culture characteristics need to be evident?
People need to be able to work quickly. They need to be able to manage their mood effectively. They have to be able to deal with fairly tense environments, because they are, and they have to want to learn, develop, and grow, because it's uncomfortable at times for sure. But if people are of the mindset that they want to be better, then they're okay to be pushed. If they're of the mindset they just want to come in and collect a check, then they don't want to be pushed, and they're not typically going to be a great fit. and they're not going to make the company accelerate. So although the environments, especially hyper-growth, are fairly intense, it's okay as long as people are growing and they're developing, they feel like they're getting better, then they seem to, they'll work well there. It's when they don't want to do that is when it tends to go off the rails.
And how can top talent be identified and nurtured within high-performing teams?
That's a great question. So leadership is always looking for who's stepping up. And this will probably be a non-politically correct answer, but they're always looking for people that are raising their hands and trying to solve problems that are beyond what their maybe job description is. They're willing to go above and beyond what's necessarily required to get things done. They volunteer ideas and say, hey, look, here's a problem. I propose maybe this is a solution that we could bring to the table. Maybe it's a good idea, maybe it's not. But they're willing to actually be thinking beyond what's in front of them for their daily tasks and actually trying to think of ways to solve problems for the business, especially if it can be cross-functional, cross-departmental. That's the best way to be able to really identify who the talent is.
And finally, Wade, as a seasoned entrepreneur, if you were to start a new business today, what area would you focus on?
I'd started an AI advisory service, which is tied to the fractional work that I do, but it's also very specific to actually bringing in AI tools or building AI tools inside of companies to help optimize a lot of the key areas that I typically tend to work inside of a business, but have always had to do it manually or had people had to do things manually. There's just so much that you can do with AI now not to replace people, but just to make a business more efficient, make decisions more quickly, make decisions more accurately, and really accelerate growth internally. So if you're not leveraging AI right now, and it doesn't have to mean you have to be an AI company, it means if you're not leveraging the tools that are available, I think you're going to have a real hard time in the future.
Well, if you've just tuned in, that was revenue leader Wade Lowe, and I'd like to thank Wade for sharing his fascinating insights with us this morning.
Southeast Radio's Business Matters with Karl Fitzpatrick.